And welcome back to Mortgage Talk with Mark. My name is Mark Harrison. I'll be your host today, and this is my company here in the background, Texas Mortgage Source. Been doing this a long, long time here in Central Texas, and real excited to visit with a guy that I just met a few months ago. I guarantee you hold on to your seat because this is going to be a great show. Do not change the channel. I do need to apologize a little bit to my video audience because we're getting some rain here in Central Texas, which has been very rare over the years in Central Texas in July. And I'm having a bad hair day, but the good news is I still have hair. Isn't that right, Lauren?
Thanks, I appreciate that.
But I met Lauren Riddick back in, I don't know, March or so, where he hosted a 3-day conference in Knoxville, Tennessee. He hails from East Tennessee. And I really love this guy. He has a passion for the reverse mortgage industry, passion for the mortgage business in general. And I just wanted to bring him on because he's full of fun and knowledge and wisdom and just a good time. So introduce yourself to the good folks here.
Well, first off, Mark, I just appreciate you. And folks, I'm going to tell you what you already know. You could not have anybody better than Mark and his mortgage practice.
Oh, man.
Serving that area, man. He is an unbelievable fella. And likewise, I feel the same about you, Mark. And in fact, I'll make only one correction. Actually, the first time we met,
oh, that's right,
we were at the AIM conference and we got to hear that great story about the coffee bean.
That's right. That's right.
And, what a great,
was that Nashville or was that in Vegas?
It was Nashville. That was Nashville.
Yeah, that was awesome. That's right.
In fact, it was the focal point was a guy from Texas. And of course, if we have time at the end, love to talk about that. But guys, listen, Mark's exactly right.
His name is Damon West. He wrote a book called The Coffee Bean. Damon West.
Yeah,
highly recommend it.
Highly recommend. And but guys, no, it's a true honor to be here. And let me also tell you, I am from East Tennessee, and I love asking the question, Mark. I think I may have asked when we first met. Does all of our Texas listeners know why Tennessee is known as the volunteer state? And I will tell you guys,
I think they came down to volunteer in Texas.
That's right. We had more volunteers from the state of Tennessee than all the other states combined to help you guys fight for independence in San Antonio at the Alamo.
I love that. I love that. Yeah, that's right. Yeah, Davy Crockett is apparently very famous for saying, you guys can all go to hell. I'm going to Texas or something.
Well, and actually, we have a Sam Houston schoolhouse, maybe about 5 to 6 miles as the crow flies from right here where I am. Nice. And he was our governor before, obviously, Texas. And, of course, that's a very well-known name. But, Texans and Tennesseans are kind of like first cousins, Mark. And, one thing that I will tell all of you guys, you understand that, hey, listen, in Texas and Tennessee, if you're messing with somebody's mama or their grandparents or,
watch out.
Yeah, you might end up drugged behind the truck or put in a tree kind of thing. And so for us, I want to just challenge you, as Mark said, if you'll not turn the channel, because I already know we lost part of you the moment that Mark said, I'm passionate about reverse.
Yep.
You just plugged out. And you know what? I'll be patient with you because I've been in mortgage lending 27 years.
Yeah, and 40 years here, man.
Yeah, man. And it took, 13 years for me to pull my fingers out of my ears and open my eyes. And so I'm gonna give you guys a gift. And then, Mark, we can go anywhere you want to go with this.
Sure.
But let's talk about the elephant in the room.
Let's do it. Let's start with that.
In 2 minutes, you're going to know more than 98% of everybody in the nation, and that includes mortgage, real estate, financial planners, and attorneys do. Now, listen, that's a big statement, but y'all listen up. In 1987, Congress developed a program, in fact, introduced a bill that allowed Americans that were 62 years or better who had acquired wealth through the equity of their home, a better way to live, a better way to retire. And in 88, Reagan signed that bill into existence. And since then, there's been well over 1 million Americans been served at a very high level, including my parents. And so I would just tell you guys that here's the deal. A real estate agent goes to a listing appointment and he or she determines that there's about a 12 to 13 year mortgage that still needs to be paid off. About 12, 13 years, I'll have it paid off. There's a mortgage. Folks, here's the question. until that client pays the home to zero, who owns the home? Client or bank?
Client.
Yeah. Well, Mark, you know this, but most don't. Most will say, hey, well, if there's a mortgage, the bank owns the home until they pay it off. And guys, just not true. The reality of it is the bank does not own a home until foreclosure, period. How do we know that? If someone slips on a banana peel, heaven forbid, on the front porch, they don't sue Wells Fargo. They sue the homeowner.
Right.
If the homeowner's with the real estate agent and say, I really want to get you top dollar for your home, but we got to do something about this kitchen. You don't call Wells Fargo to get permission to remodel Wells Fargo's kitchen. And Wells Fargo doesn't sign the listing agreement, the purchase contract, or the closing docs for Mr. and Mrs. Smith.
That's right.
It just doesn't happen. So the first thing that Mark and I need you all to understand, and Mark, God bless you, man, for wanting to get the word out and the truth out and willing to step out and let people know. Guys, if you know you don't give up ownership of a home, now the only thing you got to figure out is, well, man, this sounds too good to be true, Mark. I mean, number one, how can you restructure my mortgage portfolio in a way that I have an optional payment and not a mandatory payment? How can you help me buy $1 million home and I only need, $500,000 to $700,000 down to facilitate that?
Right.
Hey, Mark,
and never have a mortgage payment.
And not have a mortgage payment. Right. And Mark, how can you take my $1 million home completely paid off, and I've got $5 million in retirement? How can you take my $1 million home completely paid off that I have no access to any of that money unless I call a realtor or I call Mark? And how much of that million is at risk? The whole thing, and we'll talk about all that. But it sounds too good to be
true.
Right. And the reason it's not, folks, is that when Reagan signed it into law back in 88, he infused the FHA mortgage insurance program. So the same way that the PMI and the MIP of, PMI and conventional loans, MIP on VA, FHA, rural development, things like that, that protects the servicing bank, not the client.
That's right.
And if you just know that today, Mark, we have changed the world, my friend. If we can help people know that, no, it's not a three-headed monster in a Godzilla movie. Right. It is not snake on voodoo. You did not give up the ownership of the home. And the reason it's not too good to be true is FHA. We're going to talk about some of the cool applications. But guys, if you just know that, I encourage you to reach back to Mark and we can tell you all you need to know. But Mark, man, God bless you for giving me a chance to talk today.
I will say this, Lauren, I've been around the mortgage space for 40 years and I've known about reverse mortgages for a long time, but your conference really opened my eyes and opened my heart to this opportunity because I saw so many great men and women in that conference. I've been to 100 conferences over the years in mortgage space, and yours was absolutely one of the best ones. And I'm saying that sincerely because I'm thinking, wow. I even got on stage and said, you guys are evangelists, which is a bearer of good news because there is a lot of good news here that we need to share this. I was with a gentleman this week. He owns a duplex here in Austin. He's got lots of equity. He still has a mortgage. He's 72 years old. I showed him a way to exit that mortgage or to eliminate that mortgage payment, I should say, not the mortgage itself, and free up a lot of cash that he could travel and have a good time, and do other things too, invest money. And so it just blew his mind because I had no idea this was out there.
well, I'll tell you, while we're blowing people's mind, let's go ahead and just really do it. So
let's do it.
So guys,
go ahead.
I think at the best, if we're all honest, if we're all giving straight talk here, I think most of us would concur that even if it's not the three-headed monster in the Godzilla movie, it's just for that desperate old person.
Right.
Okay. Right. And I've heard people say this, Marty. Look, I wasn't desperate but I'm older, but it just made sense. And so let me give you guys an example of why we are so excited about it.
Let me back up real quick.
Yeah.
Real quick. It is your conference started, first of all, with your mama playing guitar, which was so beautiful and cute. And then you brought some clients up there and explain and them sharing their stories with us. And I'm like, wow, this is so powerful because they're not scripted. These people are typically, retired in their 70s, and they're just sharing their story on how you helped them. And it was so sincere and just intimate. And I really appreciate that.
Well, no, I appreciate you, man. And I think guys just that, and that's really where the core of my heart is that I've been able to help so many people. But let me go back to blowing everybody's mind. So let's say that you know someone that's got $1 million home, completely paid off, and 5 million in assets under management in retirement. And let's say that client is about 75 years young.
Okay.
Let's talk about some straight talk here. Number one, how much access does that client have to that million if they don't call Mark or they don't call your favorite realtor partner?
Zero.
How much of that million?
We call it dead equity. Dead equity.
Right. That's right. How much of that million can we take with us when we transition to glory? Zero. How much of that million is at risk to the nursing home, housing bubble, or market? All of it.
All of it. Yep.
And yet we've been taught to believe that it's a good thing.
Yep.
So what Mark is going to be able to do, guys, connected at the highest levels of this industry, is let's just say that home is worth $1 million, $1.2 million. We're going to set up a line of credit, about $500,000. And this line of credit currently is growing, guys, at around 7% tax-free, in quotations, with an asterisk, tax-free money. In other words, in 1 year, the 500,000 will become 500 and around 536,000.
Yeah.
Guys,
next year, 570.
And what is 36,000 divided by 12 months? It's $3,000 a month, folks, in perpetuity for the rest of their life, rinse and repeat, and still have access to the 500 if and when they ever need it.
And they can write a check.
Write a check. Guys, and there's some great tax strategies that we covered at our conference. But guys, listen, it's not what you think it is, right? It's an amazing tool. Yes, your gentleman in the condo, I tell them, hey, if you've got a home that's worth $700,000 and it's, you owe $300,000. Well, there's $400,000 in the same example we just gave, all at risk, can't take risk, blah, blah. And Mark, I tell them there's only one thing worse than that. Well, Mark, Lauren, what's wrong? What do you mean? What's worse than having $400,000 in equity that I can't take with me, tow at the risk of da-da-da-da-da? It's having more. Having more.
That's
right. And one thing that I love about your show here, I understand we're on a Christian network here, and I love that. And guys, listen, this is a huge tool for ministry.
Yeah.
Okay, let me explain why. I've talked to countless pastors and preachers and religious groups all over the country, and they don't really like it. They appreciate it, but a lot of times that senior client will leave. They'll leave in their will, I want my house to go to the church. Okay, and that's very uncomfortable for the ministry because the optics just doesn't look that good. Especially if there's children and whatnot. And they still have to deal with the real estate. They have to hire a realtor, have to do all that. Number two, they can't use any of that money until the senior client has passed away and it's gone through all the real estate process.
It take months after that.
Months after that.
Yeah.
And the client, the patron, the member of the church, they don't get to see it. It's a cold-handed gift and not a warm-handed gift. So what this amazing program will do, guys, it will allow you may not need this, but you could contribute in the ministry. You could do many things. Instead of making a house payment, put that in the ministry. I mean, we know we can't buy our way to heaven, but it's about doing the right thing. I will tell you guys, our audio-visual whole production that we had in our church, Mark, it was funded by clients that we were in church together. They paid for the whole thing. They still had plenty left over for what they wanted to do, but
Sure.
they funded the entire audio visual system
I love that.
through the power of the reverse. So lots of things, man. I want you to ask me what you want to ask me, because I'll get on a tangent and you'll want to pull me off the stage, man.
I told the station manager here, the lady who helps me with all this, I said, just watch out. This guy, you tune him up and he's gone. He's going to be talking. There's no question about that. Lauren will be talking, baby. And I love it. You talk for 3 days straight at that conference. But so let's talk about some of the strategies, or maybe even some of the people that you've helped over the years. That example you just used with the tithing or the giving, to charities or ministries is one that I really haven't heard a lot of. I've heard people take money out to help their grandkids, with college or buying a home, which is great. So there's also lots of uses for this product. But kind of share some of your experience over the years with us.
I think one that I'm very passionate about, Mark, is when the home becomes a house. Right? When the home becomes a house. I had a very, and I'll generally give you the numbers, of course, not the client's name, but,
Sure.
But it was a classic situation. The home had become a house. The home was worth about $700,000, and she owed $300,000.
Okay.
She was a widow. And the reasons that the home became a house, number one, there's stairs to climb, yard to mow, lots of unused space, Mark. I mean, one thing I found is our senior clients tend to be the catch-all of everybody's stuff, right? Whether they have not let it out.
Whether they like it or not.
Yeah, whether they like it or not.
Yeah.
So if you think about that, all those are great reasons, but probably the number one reason is that she's walking by her husband's favorite chair and he's not there anymore. And when you think about it, if she owes $300,000, number one, is she at 75 years young? Is she ever going to pay the $300 off?
No,
she's not. And when you understand the power of this program, why in the world would she? So
right.
What happens is we go, okay, look, she's paying probably $2,000 a month on a good interest rate on $300,000.
Mm-hmm.
And that's $24,000 a year on fixed income.
Mm-hmm.
And Mark, I got to tell you, man, she's a prisoner. She was a prisoner of her home, and she was locked in despair because she was financially tight. When they were both living, it was okay. It wasn't great. But when he passed away, the lower of the two Social Securities went away, and we all know the rest of the story.
Yeah. Happens every day.
That's right. And again, there's only one thing worse than her having $400,000 in equity she can't take with her, totally at the risk of the nursing home market, housing bubble, whatever. What's that?
Having more.
Yeah. And so what we did is we helped her understand the program. We introduced her to a real estate partner. The real estate partner listed the $700,000 house, Mark, sold it, paid off the $300,000, took the $400,000 in proceeds, and I think she bought a home. It was around $625,000 through the power of the reverse purchase, which we'll talk about in a moment. But guys, we just saved her life. Not only did we save her life, our realtor partner got not one but two transactions at about $1.3 million.
Right.
And Mark, you've been in the mortgage arena about 40 years. I've been 27. So between our almost 70 years, how much do we get paid on a cash deal when there's no loan?
Zip.
So it's a win for the client. It's a win for the realtor. And for the first time in the history of the mortgage game, we're positioned to get paid on a cash deal. Everybody wins.
Everybody's a winner.
So that would be the one that I hope everybody hears, because there's 5 widows to 1 widower in my mind, 4 to 5.
Yeah. And I had the same conversation with a prospect this week. Had me live in my neighborhood called Lakeway, Texas. And she's 72. She's a widow, been a widow for 5 years. She came to Austin to be by her son and the grandkids. She bought a home for cash, not for cash. That's not true. She has a mortgage on her current home. And I showed her a way that she can transition to his neighborhood where she wants to live now, which is not too far from where I live, actually. but where she can do a reverse mortgage and not have that $2,500 a month payment, and her son too, he goes, wow, I didn't even know this existed. You know,
Yes. Yes.
reverse purchase is a product that a lot of people have never heard of. They don't know how it works. It's a beautiful thing, for a lot of people.
Yeah, it is. And I think for those of you that are just taking notes, the amount of loan that Mark and I have to work with for each of you is based on three components with reverse.
Mm.
And of course, Texas is unique in that you guys will not allow anybody less than 62.
That's right.
And both the husband and the wife have to be 62 unless they are not living together. So we do have an exception that, if husband lives on this part of town, but they stayed married and we can prove that, but for the most part, it's 62 and
Yep.
pretty rigid there. But here's the thing, guys. If you're taking notes, the three things that determine the amount that we can work with is the appraisal, as you might imagine, the age of the youngest borrower, the more vintage we are. If you might remember, my mom's song was "I'm vintage," right? So the older we are, the more aggressive the loan amount, i.e., the less money needed down. And of course, the market, as the interest rates go up, less loan amount available, things like that. But
Sure.
Guys, if you're taking notes, 2 parts cash, 1 part loan. It's a pretty good estimate. So that means you can buy a $600,000 home with 400 down. You can buy a $900,000 home with 600 down, and so on and so forth. So
That's
if
right.
you're following us in your mind's eye, that means that on the $900,000 home, you would have a $600,000 down payment in cash, which is instant equity day one. You still own the home,
Right.
and the loan amount would be 300. And at the end of the first month, maybe you owe 301,000, and then 302,000, and then 303,000 again because it's insured through FHA. That's the carrot at the end of the stick for the bank, so on and so forth. So the reverse purchase allows the buying power to be increased far and above, right? So I think home become a house. I think the reverse purchase. I think we talked about the power of why financial planners. In fact, that Mark, I don't know, just a little north of you, Dr. Wade Fowle, the AU, Dr. Wade Fowle.
Check that guy out, Wade Fowle.
Yeah, he helped develop the RICP designation, Retired Income Certified Professional. He's actually based out of a little east of Dallas.
Okay.
And he and a lot of his colleagues will challenge financial planners with fiduciary that you are more likely to be sued if you don't talk about a reverse than if you do. Now, listen, Mark and I are not throwing stones at anybody, but if somebody's listening or somebody that's a fiduciary partner with financial planning, get with Mark, man, introduce them because we want to look out for them too.
Yeah.
But let's talk about a needs-based borrower really quick. Mark, we've got a guy. We have in fact, a program that has been able to identify senior clients. We can do this in your market as well, but senior clients that are, let's say, 70 plus years of age, they're facing foreclosure. They've had just health issues. They weren't expecting $6 a gallon gas and
Right.
God knows what else, right? Or medical stuff.
$10 a dozen eggs or whatever.
All that, right?
Yeah.
And so we have a client right now in the Carolinas. They were going to lose their home at the end of this month. Their home's worth $250,000, fairly modest valued home. They only owed $25,000 to $30,000.
Wow.
And here's what we're going to be able to do for them: eliminate their mortgage completely, pay off their forward mortgage, save it from foreclosure. Number 2, we're going to pay their taxes and insurance for the rest of their life.
Yeah.
And number 3, about $40,000 split out between closing and the course of a year, and change their life.
For sure.
So
save their home.
Save their home, save everything about it, man. So it's just a great thing.
It
And
really
and
feels good when you help people like that,
Yes.
And so
yes.
I'm so glad we only got a couple minutes left, and I'm really glad that you were able to take the time to, because I know you're busy, take the time to share this because you have such a passion for it. It really gets me excited too. So what do you want to leave with the listeners in the last couple of minutes of our talk today?
Well, for one, I hope that you and I continue our partnership and
Absolutely.
we really get this thing going because I'm excited about coming to Austin and us filling the room and just really making a big impact. But I think, folks, I would just and again, everything goes back through Mark. But if you want some good resource, you can go to reversewisdom.com and do a little research there. That's a good source of information.
Is that your website?
It is. It is.
Awesome. Yeah.
It's got some really good tools on there. Just make sure and put in there that you heard about it from Mark's show, and we'd love to make sure that we take care of you guys and work conjunction with you. But I think the biggest thing I would say, Mark, is that guys, be bold. Reverse is not what you thought it was, and if you just know that it's just like any other mortgage, it just has an optional payment, and the
Right.
power of it having an optional payment is because it's insured through FHA, and there's so many applications. And if you just really want to know more about it, get with Mark. We can run some scenarios. We can, your guy in the condo, whatever, guys. That's how we all help each other.
Yeah.
And whether it's ministry, whether it's helping yourself, whether it's helping someone you love and care about, or all the above, like I said, you could not have anybody better than Mark Harrison. This guy's
Well, brother,
phenomenal.
that's so kind of you to say all that. And, but you're right. We're a team. We may work for different companies right now, but we're a team even around the country because we're trying to spread the news on the good news of reverse mortgages to a group of millions of people who don't know about it. So we're
That's
taking
right.
one show at a time to do that, and I couldn't be more honored and grateful for your time, Lauren. And we're wrapping it up here in a few seconds, but thanks again, and let's talk soon.
Hey, great job, Mark. Keep doing what you're doing, making that big impact. And remember, the volunteer state, man, we're like first cousins, so it's all good.
Brothers, not cousins, brothers.
That's it. That's it. We definitely are brothers in Christ, man.